to Nompumelelo Siziba at the JSE. Good afternoon, Nompumelelo. Take us through what's happening at the markets today.
Thanks very much, Nzinga. Well, the all-share index is in negative territory at the moment, being weighed down heavily by the resources counters. Not that long ago, it was in positive territory with the financials doing quite well, but things have swinged around for some reason. Analysts have described the impact of the budget, yesterday's budget delivered by Finance Minister Pravin Gordhan on the markets, as bond neutral and rand positive. And indeed, the rand has been doing quite well. It's still firm. It's still hovering below the 13 rand against the dollar mark. So doing well quite nicely there. And then we've had some results come out. Barclays Africa reporting headline earnings up 5%. Pardon me, revenues up 8%, not doing too badly. And Sibanye Gold doing particularly well, seeing headline earnings up nearly 270%. So doing quite nicely there. Let's take a look at the indicators. Well, I'm joined by Ian Cruikshanks. He's the Chief Economist at the South African Institute of Race Relations. Thanks very much for joining us, Ian. So, post the budget, we see that the rand appears to have strengthened. Was this a market-friendly budget, and was there any movement on our bonds?
Market-friendly. Was it friendly to anyone? You know, it was a tough budget. It was a difficult situation for government to be in, trying to wring revenue out of an economy which is on its knees, literally. And I think that that's part of the problem. I think that really they've got to the stage where they're literally trying to wring blood out of a stone. And that's just not possible. They've reached the cul-de-sac regarding potential earnings, and that's made quite clear in this budget. Certainly, the higher earning taxpayers are being heavily penalised. There's no doubt about that. Worldwide, it is said that once you go over 45% for your maximum tax rate, people actually start to cheat much more, or else leave that particular tax domain. So this is a big risk, I think. In addition to that, all the other brackets, which will have moved up to some extent as well, is going to mean people are going to become less well disposed towards SARS, and this may make it more difficult to earn revenue in the future.
That's quite a negative perspective there.
Yes.
But what impact do you think the tax increases are going to have in terms of the retail sector and the broader economy?
I think it's going to be an impact, most definitely, on consumer spending. You know, it's going to hit the retail sector to some extent. It's going to hit everything from motor car sales to house sales. Already, home agents are saying that they're finding fewer buyers for high-value homes. So I think that this is having an impact. It's going to affect Mr. Average Man. He's going to have to pay more for petrol and food and all the basics, and there's no way out of that. And it may just be where, as I say, the average disposition towards SARS gets a little bit more unfriendly, where it has been quite a friendly relationship in the past.
Now, we know that we have a very narrow tax base, and hence,
yes,
you know, you're talking about people being fewer people being penalised, so to speak.
Yes.
But do you think there were enough measures put in place by the Finance Minister yesterday to actually enable those who are on the lower rung of society, so to speak, to actually come up, whether it be, you know, the money that he dispersed to NSFAS and so on and so forth?
Well, that is promised to disperse, so we've got to see that it actually arrives, and that's the next challenge there, I think. I think that the total cost of living is such, it's going to be very difficult for the lower income earners simply to mark time, to hold the position they're already in, and I think that's going to mean that it'll be tougher times for the entire economic brackets.
Okay, and then let's take a look at a stock, Sibanye Gold.
Yes,
it came out with headline
news.
Earnings of 269% increase at 2.5 billion rand. Despite paying a full year dividend to shareholders of 145 cents a share, it looks as though shareholders were not excited by their very good results, with that stock dropping by nearly 7%.
Yes, I would say that's unexpected. But, good results were expected. I'm not quite sure exactly how much shareholders were looking for, but it's one of those things. There was a lot of waiting for the results. So it's a question of, the old stock exchange saying, buy on the rumor. There was a rumor of good news, sell on the news. The news is out, okay, cut the position and let's go and look and do something else. I think that is it. So it's a question of just running down positions, and maybe it'll bounce back. Probably within the next couple of weeks or so.
When you look at the stock itself, what do you think about its prospects? We know that Sibanye has been on a major acquisition drive. Wow. The Reserve Bank confirmed that it's given approval for Sibanye to go ahead with its US Stillwater acquisition, Platinum Group Metals firm out in the US. And it also still wants to acquire more assets in South Africa. Is that not too aggressive?
Well, perhaps, but it's quite clear that at a price of $1,200 an ounce, that is a sort of a pivotal level at which it suddenly swings from profitable to very profitable. And I think they're looking around now and saying, if there are opportunities at this price, and maybe they have a longer term positive gold price outlook, we can actually pick up some good assets. I think that they're going to do this, and they've shown that they're good at developing projects which other miners may find daunting. So that's very much in their favor. And as far as the platinum is concerned, to bring some of those assets into profitability in such a short space of time is a great compliment to their mining abilities. And I think for that they may find some new followers of the shares.
Okay. Now, I think Barclays Africa is one of the first finance houses to release their results for the year ended last year, for the year ended 2016, pardon me. They report revenue was up 8%, headline earnings up pedestrian 5%. Yes. But worryingly, their impairments were up 26%, which suggests that maybe consumers and businesses are a little bit under the codge. What are your thoughts on that stock?
As you said, it just shows the strain, the increasing strain there is on consumers, and consumers at all levels. And I think this is going to be a negative factor for the retail sector, for all areas of consumer spending. And I think that, the fact that the impairments are so much above the actual additional revenue that was earned, just that describes the operating environment. It's very difficult, and I think there are more people who've been looking at the cost of living and they've been right on the edge, and now perhaps they're finding themselves tilting a little bit below that edge, which is why the bank's impairments are rising.
Now, still related to the finance sector, we heard that in the United States, the FOMC minutes seem to suggest that the Fed is looking to raise rates sooner rather than later. That obviously has an impact on our Reserve Bank in terms of its decision making and whether or not it raises interest rates, and ultimately has impacts on the financial sector. So what are your thoughts on the whole story?
Well, I think it's not a question of if they'll raise rates, it's when they'll raise rates. They've said they're going to, they're just waiting for data to be productive towards that, and I think it's on its way. The economy is starting to recover. Unemployment is at a historic low, there's no doubt about that, and so we're going to find that the overall costs are going to start going up, and they'll rather anticipate that in advance than wait for it to overtake them. So I think what that means is we'll see a rate hike probably in the third quarter, not much later than that, I would think. And if that happens, then global rates are going to move. What's the impact on South Africa? What does it mean to us? It means that we'll find it very difficult to resist that global move. And what we may find is that we start losing capital inflows. And, we've already been losing significant foreign investments on the JSE, on the equities market. They may find that there isn't a complementary move into bonds because they're going to say, well, the differential isn't enough. So it could well force our bond rates higher. Government's cost of borrowing could go up. That means the overall cost of bank credit will go up as well. It just adds to the pressure that we may see on consumers and on business, particularly regarding to their confidence in the future.
All right, Ian. Thanks very much for your time. Well, there you have it. Ian not painting a very rosy picture. He suggests that if the US Fed does raise rates, the Reserve Bank will almost be forced to do the same. And no doubt that will put a spanner in the works of us getting economic growth in our local economy. After the break, Nzinga will have some more business news for you.